Good afternoon, and thank you for joining us today for our webcast entitled Audit and Tax Readiness and Preparation. My name is John Usanio. I'm a partner and practice leader of Citrin Cooperman's not-for-profit industry group. I'd like to welcome all of you to today's seminar. Before we begin, and on behalf of Citrin Cooperman, I wanted to extend our sincerest hopes and best wishes that you, your family, and friends are all staying healthy and safe in these times. The effect of the coronavirus has caused personal, economic, and business impacts that are going to have both immediate and long-term impacts to many. Businesses of all types have really been grappling with the current events and how to adapt in these unprecedented times. One of the things we've noticed is that when the pandemic began, to ease some of the burden, regulatory filings and deadlines have been extended. However, with them quickly approaching and the new timeframes that have been established, in conjunction with not-for-profits having fiscal year-ends closings occurring in the near future, and still operating in remote conditions, it all blends for a challenging time for many organizations. Financial professionals have been accustomed to having external audits performed, and it has become an inescapable reality. For not-for-profits, in particular, statutory requirements with charity filings, tax compliance, and in general, to meet the needs and demands of lenders, donors, grantors, and key stakeholders are some of the many reasons for timely and accurate information in financial statements and tax returns. Ultimately, every audit generally boils down to the risk of material misstatements in the numbers, and the responsibility for that presentation rests with management to ensure that the lowest level of possible risk and errors is contained. To achieve this, a smooth process in preparing audit-ready financial statements requires well-documented information and transactions, accurate data, and backup support that can be produced in a timely manner. Although audit and tax preparations at times may appear to be disruptive and intrusive to many organizations, cooperation in supplying the needed information in a timely fashion can help ease the audit burden. In today's webcast, we're going to dive into some of those considerations for audit and tax readiness. In particular, we're going to begin with a brief update on the PPP program, and then dive into certain other matters as it relates to audit best practices, especially in remote environments, the impact of new standards and compliance matters that are forthcoming, and certain tax matters and changes and considerations for the upcoming year. This webcast is being recorded for future playback. We do encourage you to ask your questions utilizing the Q&A feature in the toolbar settings. We will have planned time for Q&A towards the end of the webcast, but we'll try to respond to questions as we receive them live. And with that, I'd like to turn this meeting over to Mark Sonnenberg, a partner in our Long Island office and the moderator for today's panel. Mark?
Thanks, John, and good afternoon, everyone. Once again, my name is Mark Sonnenberg. I'm a partner in our Melville office, and I'll be the moderator for today's presentation. I wanted to spend a few minutes to just provide an update on some of the government-funded programs, specifically the PPP. First and foremost, today being June 30th, today is actually the final day to submit a payroll protection program application. So if you have not done so, I urge you to reach out to your SBA lender ASAP. As we've been informed, many banks have actually stopped accepting applications up to a week ago. So what I would encourage you to do is, if you still are in the process of scrambling at this point in time to find a loan, the SBA does have some information on their website to search for SBA lenders. So if you're looking for a last minute application, I would encourage you to search on the SBA site. Overall, the spirit of the PPP loans was possible loan forgiveness. And at this time, there are forgiveness applications that have been created. And what I would suggest and recommend is that if you have not done so, that you start reviewing them as soon as possible. There's been some more advantageous changes that have been made in order to make it more likely that an organization would be able to reach full forgiveness, such as increasing the covered period from 8 weeks to 24 weeks. So it's been very positive from that standpoint, but there are some planning opportunities out there to maximize loan forgiveness for your organization. So I would start to take a look at that now. regardless if your organization or the organization that you're working with is able to receive forgiveness, from an advantageous standpoint, these loans are payable with a 1% interest rate, and they're payable back over either a 2-year or a 5-year period, depending on when the loan proceeds were received by the organization. In terms of accounting, there has been some information that's been released by the AICPA in the form of Q&A, although there's nothing extremely authoritative at this point. I would encourage that as you go into your planning process for the audit, that you start to understand this guidance, speak with your auditors and your financial advisors to basically understand when you're going to be recognizing this revenue, when it would be recorded as a loan, how you'd recognize it as a conditional contribution, etc. There are different examples and scenarios by which you would recognize it. And I would encourage that now is a great time to start to look at that. What we've encouraged everyone and our clients from the start is to maintain good records on how you are spending these funds. This is going to become critical, obviously, from your audit, because your auditors may want to see these, but also in terms of, nobody really knows how organizations are going to be audited or investigated, or if banks are going to be requesting additional information. And I would suggest if you can maintain good and accurate records, it'll make your life easier going forward if anybody should come down the line and ask. One important point that we want to bring up, and this is not authoritative at this point, but in terms of organizations that are subject to a uniform guidance audit, at this time, the expenditures for the PPP funds would not be presented on the schedule of expenditures of federal awards. However, if your organization did receive EIDL, the Economic Injury Disaster Loan Funds, those would be subject to uniform guidance single audit requirements and would have to be presented on the CIFA. In terms of expanded programs, there are rumors out there that the government is working towards additional programs, one being which you may have heard about, the Main Street program, which is not effective for nonprofits, but we are certainly all on the lookout in terms of additional programs and funding for non-for-profits. So we would encourage you to stay tuned on this. Our firm is certainly up to date on this information, and we do have a COVID-19 response unit section on our website. So we would encourage everyone to regularly check this site, and this is where we put all of our up-to-date information. And reach out to your advisors. In terms of these programs, they seem to be changing fairly rapidly, and what we knew last week could be different now. And so we find that it's very important just to stay up to date on the changes. So that's by way of an update of where we're at on June 30th. And now at this time, I'd like to introduce our presenters and then dive into our program. And as John has mentioned, please, we encourage everyone to ask questions, and we'll do our best to get to your questions as the presentation is going. So along with John Eusenio, I'd like to introduce Brian Gigante. And Brian is a partner from our Bethesda, Maryland office and has served the nonprofit industry for more than 40 years. Brian initiates business planning and management advice, which is critical to the effective operation of his client's organization. Next, we have Alex Reagan. Alex is a partner from our Boston Metro office and has more than 20 years of experience in supporting New England's not-for-profit community. Next, we have Gina Pelisano. Gina is a director in our Providence office, and Gina has nearly a decade of experience in working with non-for-profit clients, including membership organizations, trade associations, health and welfare, and social service organizations. So first to talk about, next slide, please. Okay, great. So just diving into audit readiness. So this is going to be a unique year as compared to prior audit, review, or tax engagements that you may have entered into. And we wanted to go through some considerations that you can apply to your organization's upcoming audit engagement. And, Gina, along with some of the other panelists, are going to be providing some of their thoughts and best practices given the current landscape that we're under. So Gina, our first question I'd like to for you to share is how will the audit look different this year from years past?
Thank you, Mark. That's a great question. I think we can all agree that 2020 has been a year like no other. So it should come as no surprise that the audit will look a little bit different. So as Mark discussed earlier, this year we have COVID relief programs such as PPP loans. We also have state, local, and federal grants that came out. So all of these new transactions will need to be accounted for and discussed with your auditor or accountant to make sure that the accounting treatment is appropriate. The biggest change this year, though, is the fact that we are working under a remote environment. With many organizations and accounting firms working remotely, it seems to be that our planning and fieldwork procedures will most likely occur off-site. That means more virtual conferences, more phone calls, more Zoom. And information will have to be transmitted on a more remote basis, which we'll be discussing later in this presentation. As if that wasn't enough, there are also several new accounting standards that go into effect this year. The first one is ASC 606 revenue recognition. Well, there has been some good news with the FASB recently delaying that standard, the implementation for 1 year. There's also ASU 2018-08, which is a new standard for not-for-profits on the accounting for contributions. And then there's ASU 2016-01, the presentation of cash and restricted cash on the statement of cash flow.
Great, thanks, Gina. And just one point to add to that, those are certainly good things to think about. For organizations that do choose to adopt the revenue recognition standard this year, you still can. The delay in effectiveness is certainly going to come in very handy for a lot of organizations. Certainly, organizations are going through many challenges right now. So, if you're not ready for it and you're not exactly sure how to apply it to your organization, the deferral might make the most sense. So moving on to internal controls, what are some of the things that nonprofit organizations should be aware of?
So with respect to internal controls, there are a few different things that nonprofits may want to consider during these times. The first is the importance of continuing to maintain oversight, even if working remotely. So even if you're not physically present in the office, you still want to be performing the same review procedures that you were performing before. If prior to COVID, the board was meeting on a monthly basis or a quarterly basis and reviewing the financials, you want to be able to pivot that to a more electronic environment, whether you're meeting via Zoom or even just telephone calls. Another thing to consider is checks and balances and segregation of duties, particularly if staffing levels have been reduced. So unfortunately, we have seen that that's been an effect of COVID. And so we want to make sure that the personnel who are performing certain functions, particularly in the accounting space, you want to make sure that those responsibilities are divided up. And lastly, you want to also consider the requirements for physical signatures. So if your procedure prior to the COVID pandemic was to review an accounts payable invoice and physically sign off on the invoice, you want to consider whether or not that's still an appropriate procedure, or if you can pivot that to some kind of remote procedure. Alex, do you have anything to add?
Yeah, actually, you'd mentioned before about some of the disaster relief programs that are out there and the additional stimulus money. There's a couple of funds that have been established that actually give disaster relief payments. Some of my clients have received some of these funds, and they're actually meant to be distributed to individuals in the community, certain populations. And this is something new that is not typical, I think, in our world. It's different because they're disaster relief, and we'll all agree that COVID-19 is a disaster. But it's also something that's governed under Section 139, disaster relief payments. So in the realm of internal control, I think it's important to also consider, while these, some of our clients might be getting some of this money to distribute to individuals in the community that need this money desperately, it's also important to recognize that they need to institute proper controls over the administration of these funds. So, while it's not a regulatory requirement to do this, there's also a lot of exposure when you think about how, as an organization, our reputation comes into play. you know, as we distribute these funds, we want to make sure that we're responsible and that the funds are going to the right population. And so we want to think about the internal control environment as it relates to the administration of the funds as well. So that's a consideration to think about now.
All right, thanks, Alex. John, did you want to add to this?
Yeah, just to add on to what Alex and Gina had mentioned as well, I think when the pandemic hit, you know, again, this hit it in the March timeframe. So what many nonprofits were doing when they switched to a remote work environment is some saw that this needed to augment or change the internal controls and the reporting. So you may, during this year's audit, have two separate functions of internal controls occurring simultaneously, one that you did pre-COVID and one that happened after COVID. And again, just have that documentation and information available. Ensure that you're communicating and expressing what the policy was to a specific time and what happened post, so that controls can be tested and relied on if they're subjected to such procedures.
Thanks, John. And just to mention one more point, just because internal controls is so critical to organizations. You know, we kind of, as every organization went from being in the office to remote kind of overnight, and it's been going on now for about 3 months. So I think now is a really good time to kind of take stock in terms of what's been working, what hasn't been working, and to evaluate your internal control environment and see what changes, if any, need to be made. And I would encourage organizations to do this regularly and adapt, especially if we go through the hope of returning to the office. You know, when it's fresh in your mind and you've gone through transactions on a daily basis, now is a perfect time to evaluate and make changes if need be. So great. So now moving on, the planning phase of the audit is critical, I would say, in order to have a good foundation and have a smooth audit. So Gina, what would you say in terms of working remote? What are some of the best practices that organizations can face during the planning phase of the audit?
Well, you're absolutely right, Mark, that the planning phase is critical. The planning phase of an audit really sets the tone for the audit as a whole. And, you know, in this post-COVID world, we have so many different considerations with the remote aspect. So the first thing is you want to make sure that you have meetings and phone calls on the calendar for time needed with key personnel. So that can include time with the executive director and the CFO to discuss everything that happened over the year, to discuss the interim financial numbers. And you also want to have time with the individuals who are performing the various transaction cycles, such as AR, AP, etc. And during that time, we would be walking through the controls. So prior to COVID, historically what we would do is we would actually sit down next to somebody, we'd go through their processes and procedures, and maybe they would show us the pieces of paper that they use during the normal course of their operations. Well, now those processes and procedures are going to be remote. So we'll be doing screen sharing, phone calls, Teams, Zoom meetings, things like that. Another thing that the organization should do to help prepare for the planning phase is to provide key documents ahead of time. So that can include the interim trial balance so that we can look and see how the year is shaping out so far, significant changes in grants, agreements, and other key documents, and the board meetings, the board minute meetings for the fiscal year. That way we can look and kind of see what happened during the year, what are the highlights, what are the things that the board discussed. Another key aspect to our audit planning is just discussing any new areas of audit focus. In addition, we'd want to discuss any new grants or contributions. And as we discussed earlier, we want to make sure that the accounting treatment is appropriate. And finally, we also want to consider compliance with debt covenants. So have you evaluated those on an interim basis? Does it look like you might need to obtain a waiver? So those are just some of the things that we would have, that we'd want to consider during the planning phase.
All right, great, thank you. And, you know, one other point I'm just going to mention regarding the planning phase. So COVID has hit every organization in a different way. And, you know, some responsibility of management is going concern assessment. And, you know, unfortunately, from the financial impact of COVID, it's possible that some organizations that were fine before now may not necessarily have a going concern, but they may have to assess the going concern. So I think during the planning phase, it's a good opportunity to understand the assessment process in terms of looking at your cash flow projections, taking a look at the financial health of the organization, and understanding if there is a risk of the organization continuing in as a going concern for a 12-month period. Whether or not that you're going to fall into that realm, the planning phase is a great time to look at that, as compared to the execution phase when you're ready to issue your audit and you're kind of scrambling at the end of the day to assess that. So Gina, next, how should organizations and auditors coordinate the remote delivery of information, since we're all working remotely, the auditors, the client? How would you recommend going about that?
Well, with cybersecurity being such a hot topic, the most important thing is making sure that your information is safe and secure. And Citrin Cooperman is proud to be able to offer a secure client portal that our clients can use to securely transmit data to us during the audit process. It's very simple to set up. You simply reach out to your CC representative and we can set up that portal for you. And then within just a few minutes, you will have access to the portal, and you can use that to upload all of your information. We can then go and download it, pull it down, and start working with the information for the audit. We all know that email is not the most secure method of transmitting data, so I would highly recommend making use of these secure portals. You're going to be having to scan and upload so much documentation. You need more space than what email can provide. So I think using a portal is probably the best way. We've also talked to our clients about, getting creative with maybe mailing documentation, having somebody pick it up, or even going into the office and scanning a whole bunch of documentation. But I think ultimately the easiest and cleanest way to transmit data is through the use of a secure portal.
Yeah, Gina, that's a really good point. I can't stress the importance of security enough. And the environment that we're operating in, unfortunately, there's been a rise on hackers and, accessing information via email for the hackers. Unfortunately, I'm not going to say it's easy, but it's more susceptible to a data breach. So, I would encourage organizations to use a secured method of transmitting data, and I would not send anything secured via email. That would be the big takeaway on here. A question came through, so I want to pose this question to the panel. So the question reads: how about a situation where we do not physically sign off on reviews, but indicate such review by an email notification? Alex, did you want to take this question?
Sure. I think any form of documentation that you're going to maintain in a, obviously that suffices. An email notification of approval by authorized people is proper authorization. So that is your documentation, the email. So that is part of the internal control process.
Okay. So next question, in terms of the field work, and audits just inherently can be disruptive. There's a lot of information that needs to be provided. There's questions, there's analyses, and I think everyone certainly can appreciate a smooth audit. So Gina, during the fieldwork portion of the audit, how can organizations ensure that the audit goes smoothly? What are some best practices you would say?
Yeah, so the fieldwork portion of an audit, that's really the meat of the audit. And there are a number of things that organizations can do to help make sure that the process is relatively painless. The first thing is to make sure that the books are fully closed at the end of the year and before the start of the audit. It can definitely result in inefficiencies if on day one, the auditors are finding that the books aren't reconciled and accounts just aren't where they should be. If you're having trouble reconciling your accounts prior to the audit, feel free to reach out to your Citrin Cooperman professional for assistance, and we can help you get things squared away. The next thing is to review the auditor's request list in advance, determine who from the organization is responsible for each item that's being requested, and if there's something unclear that's being asked of you, definitely reach out to the auditor and see if you can get clarification. Sometimes we may refer to certain reports by a name that's not what you call it. So a very simple conversation can help clarify some of those items. And as we discussed earlier, uploading information to the portal, if you can do that prior to the audit start date, that will certainly make things more efficient. The worst thing is when it's day one and you're kind of just sitting there waiting for information. It's hard to get started when you don't have a complete package. Another good tip is to follow up on confirmation requests throughout the process. So we will often send an accounts receivable confirmation to a grantor or another party who you may have a receivable balance with. And oftentimes we'll find that either the confirmation request isn't returned or it comes back with errors or discrepancies. So when a confirmation isn't returned, we will then have to ask you for more information. So you may need to provide us with backup documentation or cash receipts documentation, and that's just more work. If a confirmation comes back with errors, that's even more work because now you have to figure out why there's an error, why this third party provided this information. So if you can just follow up on those confirmations ahead of time and we have them on day one of fieldwork, that will just make things all the more simple. The next tip was something that we developed right when the pandemic had first started and we were beginning the process of doing our remote audits, and that's to set up daily check-in calls with the auditors. You've all heard the saying, out of sight, out of mind. So by having these regular calls on the schedule, it helps to keep the process moving and ensure that you're consistently maintaining communication with the auditors. And lastly, for organizations who have federal funding in excess of $750,000 and are subject to uniform guidance single audits, it's always a good idea to coordinate the selections prior to the start of fieldwork. That way that information can be pulled and uploaded in advance of fieldwork starting.
Thanks, Gina. And, along the lines of the single audits, as we mentioned earlier, at least as of now, those EIDL funds are subject to it. And I have seen organizations that are kind of right at that cusp. So the way the rules work is if you've expended in excess of $750,000 of federal funds, you'd be subject to a uniform guidance audit. And, it's very important to take a good inventory of your federal programs and your federal funds. Gina talked about ways, for an audit to go smooth. A way for an audit not to go smooth is if you have an expectation of a time frame and then the auditors discover that you have federal funds and now you're subject to it and you're not ready for it, and now all of a sudden you're kind of scrambling and you may not have the controls in place. So from a planning perspective, I would highly encourage organizations to take stock of your programs. When in doubt, have conversations early with your auditors, wherever they are, and evaluate those programs. And sometimes there's some ambiguity in contracts where you're not sure if it's federal, you're not sure what the CFDA number is. Reach out to your grantors in advance of the audit, so then when you start, you're kind of ready, you have a good population, and the auditors are ready to go. All right, so moving on now to the completion phase of the audit. So Gina, what are some of the best practices at that phase of the audit?
So the completion phase is really all about the final delivery of the financial statements, as well as any other deliverables, such as the federal data collection form. I suggest setting aside time with the auditors to review the financial statements, as well as any adjusting journal entries that have been proposed. And if there are any outstanding lingering issues, that would be a good time to discuss them. Prior to COVID, we would typically hold a meeting with the board or other governing body to present the results of the audit and the financial statements. Well, in this day and age, that's going to have to be a virtual meeting. So get that Zoom meeting on the calendar and make sure that all parties have received a copy of the draft or the presentation in advance. That way they can look at it before the meeting and ask questions. And then you'll need to coordinate obtaining signatures from different parties and providing signed documents electronically. So for example, at the end of the audit, the respective parties need to sign a representation letter. So how are you going to accomplish that if people are working remotely and in different locations?
All right, John, did you want to, I guess, maybe just spend, John, a few minutes talking about some of the potential changes to the financial statements this year affecting nonprofits?
Thanks, Mark. I think just going in line with what Gina had just said, speaking upfront, either during planning or during the audit, about the potential ramifications of COVID and the pandemic and how it impacted financial statements is going to be necessary. So I think having those discussions early on, whether it relate to do you have subsequent event disclosures that are required to be put in there from a PPP or EIDL funding, the unknown impact to your business strategy and sustainability regarding the impact of the pandemic to the organization. Any adjustments, whether it be for going concern considerations or matters around liquidity that should be thought about and articulated in the footnotes, should be talked about and discussed, not just at the management level, but at the board level early on, so that there is no surprise, that there is an understanding of certain disclosures that do need to be put in place, so that by the time we're ready to present the financial statements, we're all on the same page. And that's the key, is the communication throughout the process of these changes and the impacts.
Great, thanks, John. So we talked about ways to make the audit go smooth. So Gina, what are some of the common pitfalls that you've seen out there in terms of things that can result in the audits not going smooth?
Well, an audit can either make you smile or it can either make you want to cry. The ones that have made me want to cry are ones where the books were not closed prior to, or they weren't closed prior to the audit after year end. And we were essentially spending more time reconciling things and trying to figure out the numbers versus truly performing an audit. Another pitfall is when information isn't provided timely. So if you're in the field, whether that's physically at the client's location or at home, if you don't have the information that you need, it's quite difficult to move through the audit effectively. Another pitfall is when certain schedules don't agree to the trial balance. So for example, if we receive an AP aging report and when we go to compare that balance to the TB, it doesn't agree, then we have to spend time asking questions. The client will then need to spend time researching it. So to the extent that those things can be ironed out ahead of time, it's always more effective that way. Another common one is when the opening net asset balance per the TB doesn't agree to the prior year financials. That's usually a research project that we have to kind of dive into. Oftentimes it's due to either missing journal entries or journal entries that were posted in the previous fiscal year that shouldn't have been. Another one is something that Mark touched upon previously, which is when significant new items come up that weren't discussed during planning. So that could be either a significant grant that has an impact on our testing, or it could even be, I think the example that you used, Mark, was when there's federal programs that weren't either included on the CFA or it wasn't contemplated that the organization would be subject to uniform guidance. So those are some things that can certainly derail the efficiency of an audit. And as I mentioned earlier, if a confirmation isn't received or it comes back with errors, that can certainly cause delays. And lastly, anytime we have findings, whether that's in the financial statements or compliance findings in the single audit, that can also result in delays and inefficiencies.
All right, thanks, Gina. Alex, did you want to add something?
Yeah, I mean, I think a good practice, and I always tell my clients a good thing to do is maybe look at last year's audit entries that were made, start there and just kind of look at them over and say, hey, did I address all of these? This is something I need to think about. Sometimes, I mean, I understand there are things that we reconcile monthly. There are things that are done less frequently. It differs by organization, but a good check is just to look at the prior year audit entries and make sure that all of them have been addressed. And sometimes you catch things you may have forgotten.
Yeah, and kind of along the lines of some of these pitfalls, I found that having a really good upfront planning meeting with both management and the governing body kind of sets the tone of the audit in a proper way. The expectations can be set in terms of timing. The expectations can be set in terms of who's recording what journal entries. At that time, we can have a good open conversation about changes in the organization, new grants, and it kind of gets everyone on the same page. So I would encourage you, if you're not already doing those, ask your auditors to have one of these meetings with everyone, and we found that those could be very helpful. So any final thoughts or takeaways on the audit side before we roll into the taxes?
Yes, so as you just alluded to, Mark, communication is key. If you can maintain consistent communication throughout the year with your auditor, not just during audit time, but all throughout the year, you'll be in a better position to have a smooth and effective audit. Reach out to your auditors during the year if you have any questions about different transactions that arise. I have one client where anytime they have a new or significant transaction, they'll just send me an email just to let me know. And it's a two-way street. If I see an article or maybe even a grant that they may be interested in, I'll go ahead and send that to them as well. Another thing that organizations can do is really just to maintain a good filing system and an audit trail throughout the year. That way, when the auditors do start asking questions about specific transactions, you'll be able to pretty easily grab that documentation and provide that to them. In addition, if you perform your account reconciliations consistently throughout the year, that will help you to identify errors or discrepancies sooner. It's always better if you can catch those things prior to the audit finding them. And finally, it's very important to have an exit conference to talk about what went well, what didn't go well, and what can be done better or differently next time. I genuinely want my clients to have a painless audit experience, so I'm always trying to have a discussion with them at the end of the audit on how we can improve the process next time.
Great, that was terrific, Gina. So those were a lot of great tips. Thank you. So moving on now and switching gears towards taxes, we're gonna pass the presentation over to Brian here. So Brian, what's new with the 2019 Form 990?
Thank you, Mark. Well, prior to COVID-19, there really wasn't a lot of changes in the Form 990. I think the most significant change that we saw on the 2019 Form 990 was a requirement that for years beginning on or after 7/2/2019, virtually all organizations are required to file the form electronically. There were and are still a few limited exceptions, including if the name of the organization has changed, that has to be filed in paper, not electronically, regardless of the size. If Form 990 is for a short period, do a change in its accounting period, again, you can't file electronically. Or if the exemption application is pending, these are all the reasons to do that you have to file by paper. Or the 990 is being filed before the end of the tax year, and that does not include final returns. And the final thing is if you attempted to file it electronically, but the return was rejected even after the contacting the provider, there's specific guidance on how you should file that return in paper. So with that change, again, there really was not very much prior to COVID-19.
Okay, thanks, Brian. So how has COVID-19 affected the filing of Form 990 for 2019?
Sure. So that's where I'll see the bigger changes. So it's affected the filing of Form 990 in several ways. First, there was federal legislation and state legislation was passed to change the original filing date of Form 990 series from May 15th to July 15th. Similarly, quarterly estimates relating to Form 990T and many of the state and local equivalents of this form were also moved to July 15. But that being the case, many states and local filing dates were not moved. For example, for those organizations in DC, the first quarter estimate was moved to July 15th, yet the second quarter estimate was kept at June 15th. Doesn't make a lot of sense, but it really makes an organization have to stay on top of this, both not just the federal, but the state laws as well. The second thing that happened was specific legislation was passed to suspend the need to track UBIT gains and losses. And by UBIT, I mean unrelated business income activities by business line. As many of you will recall, under prior law, a not-for-profit was allowed to aggregate gains and losses on UBIT activities and net those activities for purposes of paying the UBIT tax. This was advantageous to not-for-profits as in many cases, I'd call them loss leaders were considered UBIT to offset gains from more profitable activities. The last tax law changed this approach and required the not-for-profit to report based on separate lines of business where they could not offset the losses from the gains. But under the legislation passed, we get a one-year reprieve for now. And I say for now because we really don't know what's going to happen, but when we get back to the old normal. Now, we have observed many nonprofits putting off the filing of Form 990 due to the business disruptions caused by COVID-19. While we certainly understand the issues we all face due to COVID-19, we would strongly urge nonprofits to take care of the Form 990 filings now rather than later. Here's why. The latest 990 is needed for loan and grant applications. So a lot of them require the latest, not something a year old may not qualify. From an operational standpoint, you want to show funders and lenders that your organization can handle this new normal under COVID-19. Saying that a 990 may not be available, may not be an acceptable answer for them. Fundraising, charitable solicitation registrations usually require your current 990. Certainly these registrations can be extended, but the final due date will come sooner rather than later. And it's now to take care of that tax. And finally, there's state and local tax issues. There have been several articles that are opining that work from home may inadvertently create nexus in some states and localities. And what that means, and I'll just use the local here, that if your organization is based in Washington, D.C., and you have employees in Maryland and Virginia, when they were coming to the office, there was no nexus being created. But now, if they're working from home, the question is, does that create nexus in that state? There is some good news on this, because just yesterday, a law was introduced to the Senate, the Remote and Mobile Workforce Act of 2020, which was to stop the states from asserting that. And some states actually have come out and said that they will not assert that issue, but the other states have been quiet on that. And, from our perspective, at a certain point in time, everyone's looking for tax revenues. And so states are no different. So I could see, as we're trying to get back to the old normal, if that ever occurs, the state may be wanting to assert this issue.
Yeah, that's an interesting point, Brian, about the nexus and the state and local tax issue. And I would say, from my experience, these states are some states are more hungry than others, and the states all have very specific rules in terms of how they play ball. So, we rely pretty heavily on our state and local tax experts, and I would suggest if your organization is potentially in some type of a situation where you're not sure, I would encourage you to take a further look into that. Brian?
I'm sorry, just to your point, Mark, just to your point, it's not just state income taxes. It could be sales and use taxes. There's a whole other, payroll taxes have been issued. So, I would not just assume that because you don't have UBIT or some type of activity that it's not a question for you. So I would just expand that to include other types of taxes as well.
Great, thanks, Brian. So in preparing or reviewing an organization's 990, are there any items an NFP should look for or pay any particular attention to?
Okay. So the answer is yes. And just my general comments would be is the 990 is a public document and can be the ultimate public relations document for an organization. And it can be just as important as its annual report. It's widely available to anyone who wants to look at it anytime, just about anywhere. GuideStar has, tons of years of 990s available, now being posted on the IRS website as well. And I think potential donors, members, and so forth are definitely are looking at that, are more informed than they may have been 5 or 10 years ago. And the 990 it's not like an income tax return where it's solely the numbers. The 990 includes narrative that need to blend together with those numbers to express the value and worthiness of the organization. And one of the things we look for is there consistency in the document. Does one part of the form describe a great need, while another part of the form shows a large amount of dollars allocated to fundraising and a very small amount to programming? So looking and reviewing that 990 is very important. And to follow on Gina's comments from before, just be prepared. I mean, there should be, your accountant should be providing you standard templates and work papers to help you prepare for the 990. You should be having a planning meeting with them, just like you do with the audit, to say, what's new this year? And that's a two-way conversation, not just what's new with the 990, what's new with the taxes, but what's new with this organization, so that that they can be prepared, and so that the preparation of the Form 990 goes smoothly.
Yeah, along those lines, that's a really good point, Brian. Going through the process of the 990 like you would with the audit is pretty important, and it's also important from a board governance perspective. So, from a fiduciary point of view, an individual sitting on the finance committee, and they may have the responsibility to ultimately approve the 990, and there's a lot of information on there, and if you don't look at these forms every day, you may not exactly understand, all the different intricacies on there. So by having the accountants kind of walk everyone through it, it'll give you an opportunity to, one, understand it better, but two, from a governance perspective, it'll allow you to think of questions and kind of challenge the information that's being presented on there in a way that you may not have done before. John, did you want to add something to this section?
Yeah, just a couple things, just to reiterate the importance of what Brian mentioned before, that this 990 really is a public document. It needs to, it's out there for general inspection, and more importantly, it really should be used as Brian mentioned, as a marketing means for you, or as another tool to help you gain funding, whether it's from donors or grantors. What I think is important too, though, is that as you're coming out of the COVID-19 situation, a lot of nonprofits have been reevaluating programs, reevaluating their missions. Some have changed over time, or potentially will be changing over time. And the importance of having documented and articulated the good that they do for their community and the mission of the organization within the 990 is sometimes overlooked. We're so quick to just pencil in the numbers and make sure that they agree, that we're not telling the total story of what needs to be told in the 990. So I think having a fresh perspective, having a fresh look at that every year, especially as organizations change and morph over time, is something that should be prioritized and focused on each year as well.
All right, thanks, Sean. So, we've obviously all established the importance of the 990 and its public record, and really anybody can go in and download the information. But so, Brian, are there certain parts of the 990 that you would consider to be key areas of it?
Well, Mark, I think just about the whole form, I'm going to say is key areas, but I'd like to focus a little bit less on the numbers for today, because those numbers could vary between organization, and focus more on the narratives, specifically like the description of program services. This section is where an organization makes its case to both the IRS and the general public as to why it should be an exempt organization and what it has accomplished during the past year. The organization should focus on its 3 largest programs as measured by total expense, and that does not include donated or in-kind materials, equipment, or facilities. And an organization can always use Schedule O if it would like to describe additional programs of comparable or greater importance. In addition, it should provide specific measurements. The number of clients served, the number of sessions or event held. It should be considered from both a short-term, what have we accomplished in the last 12 months, and a long-term basis as to what we're trying to accomplish over time. And it should be clear and concise. I've noticed some organizations put a mini novel in there, and I don't want to discourage that, because if they're doing a lot of good things, that's fine. But I would say most readers lose interest after so many paragraphs. So again, I'd just be clear and concise, get the point across, but do more than what I've seen on 1990, which is help people. So it's a balance, and I would say just be clear and concise. And then for 501c3 and 501c4 organizations, for programs with related program service revenues, please report the revenues here, as well as the total expenses and any grants made. The second area I'd like to focus on would be board members. Again, here's where I've seen a lot of misunderstandings, a lot of errors on 990s, because they fail to include all board members who have served at any time during the year. And I had one organization that one person served for one board meeting, but that's what you have to do. And for organizations that have boards that change on a different period than in the fiscal year of the organization, you have to list both the outgoing board members and the incoming board members. Now, there's no requirements, but some organizations like to list a start or end date after the person's name, but that's completely optional. And when you do the count of how many board members there are and how many independent board members, you would just count the board once, it will not be twice. And then you need to list the number of independent members. And again, there's always some confusion on that one as well. You have to make a reasonable effort to determine this information. And it's a 4-pronged test. Was a board member compensated as an officer or employee of this organization and a related organization? That person didn't receive more than $10,000 as an independent contractor for reasonable compensation from this or a related organization, and that the member or family member was involved with this organization in a transaction with a related organization that was required to be reported on the organization's Schedule L, or that the member or family member with the organization was involved in a transaction with the organization or related organization where that transaction has to be reported on the Schedule L of that related organization. So it's some pretty broad type of things there, but definitely you want to be able, I think from an optics standpoint, the more independent members are, I think it gives a better look for the organization. And one thing that there is an exception for is that board members can be a donor of any amount.
All right, thanks, Brian. So you mentioned compensation. So I guess just if you can share your thoughts on compensation as it comes to, what gets presented on the 990.
So, I've always found compensation is a sticky subject in a sense that no one wants to give away that information, but it's kind of a part of being an exempt organization. And that's unfortunately, that's just the price we have to pay for being an exempt organization. Some of the things that I've seen is if you're a calendar year organization, it's probably easier because you have to report the compensation, benefits, and wages on just a calendar year basis. If you're a fiscal year basis, then you have to report that information twice. Once on a calendar year basis in the schedule of officers' compensation and so forth. And then a second time, not in as much detail, but it shows up on the schedule of functional expenses in there as well. So it really comes down to what is included and what's not included. And the compensation would be compensation from this organization and any related organization. When you try to get that information from the related organization, sometimes it's readily available, sometimes it's not. The IRS has asked us to take a reasonable effort to obtain that information on the related organization, and that can be done as simply as distributing a questionnaire for the person asking for the information. If you're unsuccessful in your efforts, then you just need to report the efforts that were taken on Schedule O in order to get that information. Now compensation and what's included in that is a constantly evolving list of items and includes the usual compensation components and benefits such as compensation, pensions, benefits, and so forth, but some may not be as so obvious. And so the IRS has provided a pretty comprehensive chart of about 50 to 60 items that are in the 990 instructions of new or unusual compensation type of arrangements that the organization should consider preparing. Some of these are obvious, some of these may not be obvious. There's one question out there about whether the unrealized gain or loss on a 457 plan should be reported on the compensation schedule. Another one may be is that if you're providing housing for an organization, should that be included, even though it may not be included on a W-2 or be considered taxable wages. While not trying to be a de facto agent of the IRS, an organization should make an informed decision about what they should include or not include on the compensation schedule. And finally, when you do prefer the compensation schedule, there is a question about what you need to report. And in terms of benefits, if those benefits are less than $10,000 in total, they do not need to be reported. Certain other benefits, I should say. But what I find in practice is most organizations will do a complete analysis of the compensation and just feel from a disclosure standpoint that they would list all compensation items even if they don't have to do that.
Thanks, Brian. And something we've seen is many organizations struggle with meeting the safe harbor 33 1/3 public support test percentage. Can you share any strategies in this area?
Okay, so I think maybe a quick recap of the public support percentage may make sense. So as most of you know, a 501c3 organization must pass a numerical test that determines how much of its contribution base comes from the general public versus selected donors. And this is a twofold test. The first is a 33 1/3 bright line test. If you're over this percentages, things are great, and you're considered publicly supported. If not, there's an alternative, and that's the facts and circumstances test. And the whole purpose of these tests is to determine that the organization is supported by not just a few people, but by the general public. So as I mentioned before, if your percentage is less than 33 1/3, then there is a facts and circumstances test that allow you upon justification to go as low as 10%. This test must be met at least once every 2 years, and there are exceptions for unusual grants and contributions. But in general, a 501c organization can file either as a contribution-based or fee-based organization each year, and it can switch back and forth. The contribution-based is part 2 of Schedule A, and the fee-based is considered part 3. I'd say the first method, which is the contribution-based, would be organizations that are basically either contribution-based or funding grants that are general support grants. And the second method may be used for organizations that are fee-based. That could be like a nursing home, a medical clinic, or an organization that does a cost reimbursable contracts that they're providing programs for another organization. But the key thing, I think is a common theme throughout this presentation, is you need to look at this strategically and plan like any other aspect of your business. You don't want to fail that test. For example, a couple of years ago, we had an organization that was hovering around the test. We suggested they find more general support, and then, through that, they came up with a very good fundraising plan, and now that fundraising plan is providing substantial support to the organization. The other thing that's overlooked a lot by 501c3s is use of a donor-advised fund. What most people don't realize is that a donor-advised fund is a public charity, and any money received from one charity, from a charity to another public supported charity, is considered 100% public support, regardless of the amount of the gift. So a useful strategy may be to have the major donors contribute through a donor-advised fund rather than directly to the organization, if that gift could cause the organization's public support percentage to fall either below the 33 1/3% percentage or the 10% limit. There are some other factors involved, so that if the person's going to give through a donor-advised fund, all the gifts should be through the donor-advised fund, because if not, then any gift, regardless of the size, that's made directly to the organization would be not considered public support. And that becomes tough because when organizations prepare their 990, sometimes they look at the gift as to, whether it's the name of the person or through the donor-advised fund, and that's sometimes called the soft or hard gift recognition. When you prepare that information for your preparers, make sure you're giving them the hard gift recognition, which is from donor fund A or from contributor B.
Hey, thanks, Brian. We're getting a little tight on time, but I want to make sure we address a question that came in. The question reads, how soon during, before, or after the financial audit can you start preparing the 990?
Okay, so I love this question. I don't think it's ever too early to start. The 990 is an extension of the financial statement audit. There's so much qualitative information in there. You start it right away. Obviously, there's a lot of information that is not 630 or year-end based. So you're waiting obviously for the audited numbers to go into it, but you can do a lot with it before then. So I say you start it right away. We often give our clients both checklists, the audit and the tax checklist at the same time to prepare both, and we hit it all at the same time. So never too early.
Great, thanks, Alex. And Brian, did you want to give just some final thoughts on the tax side?
Sure. So the way I look at it is every 990 tells a story. Is it a drama about a need in society that needs to be addressed, such as a social injustice? Is it a tragedy of human suffering, such as a disaster relief? Or is it a comedy of error that based on this information, no one would contribute or join the organization? I realize that this is a little play on words, but I've seen 990s that tell such a poor understanding of the organization, what it does and what it needs. I wonder how these organizations can continue to exist.
Thanks, Brian. So with that, I'd like to thank each of you for joining us today and hope that you found the dialogue to be interesting and useful. I want to thank our moderator and panelists for all their time and insights. Again, we encourage you to visit our not-for-profit webpage for content and thought leadership, as well as the firm's COVID-19 response unit page for up-to-date information in the rapidly evolving PPP and SBA enactments and tax matters. We will be hosting more of these webcasts and webinars in the upcoming weeks and months. We hope that you join us for our next webinar later in July, focusing on fraud risk management and governance consideration. I hope you all have a great rest of the day, and please stay healthy and safe. Thank you.